Everyone, welcome to Mortgage in Ottawa's Inside Mortgages this week for April the 16th, 2012. I'm Nick Paczewski, your host. This is the first edition of Mortgages this week, so please bear with me. I hope to grow this a ton in the next coming weeks and months going forward. So let's get going first. The agenda today, we'll be talking about Jim Flaherty seeing softening in new house prices going forward in the future. We'll talk about some housing stats and Bank of Canada's poll for tomorrow's interest rate announcement. A couple more articles that we'll look at. We're talking about Canadians saying they're ready for a rise in interest rates. A few other polls that I was looking into. Thousands of mortgage agents walking away from the industry. We all had to renew last on April the 1st, so a lot of people did not renew, so that's going to be some big news. Some views on the Ottawa market from the ground floor, as well as some other surprising statistics. So, yeah, the first one was the Flaherty seeing softening in housing prices. Price advance went up 0.3% in February, so that's pretty good. With the budget, there was not any major moves. Flaherty is going to let the banks decide when they want to make changes to the mortgage market right now. In terms of housing starts, last week we saw some gains in Alberta for the first time in a while, as well as Ontario once again being the biggest surprise. Multiple unit starts in Ontario jumped 50.4% to 85,200 on seasonally adjusted annual basis. This is exceptional and pretty much will not be able to be sustained. They think the Ontario housing starts was due more to there not really much of any winter down in southern Ontario, so Toronto had a huge increase, and they're looking for housing starts to disappoint in the second half, which is pretty much pretty predictable. Bank of Canada to announce pretty much we're staying flat on prime rate. That announcement comes out tomorrow. Poll of 40 economists. Pretty much they all said we're looking till early 2013 for the next interest rate increase. So that is with the economy, that is pretty much known. Canadians say they're ready for a rise in interest rates. This poll was done by Bank of Montreal, and a majority of households, 57%, are stress test against possibility of rising interest rates. They took 25 basis point increase. 20% indicated that a 2% raise would hinder their ability to afford their home. So a rise right now, we're looking at around 3.29 for a 5-year. That puts it into the 5.29 for a 5-year, which we haven't seen in a few years. According to Doug Porter, Deputy Chief Economist for BMO Capital Markets, financial stability for Canadian homeowners in the coming years will be supported by locking in and opting for shorter amortization periods, and that's what I'm going over with a lot of my clients. With the thousands of agents walking away from the industry, as little as 72% of Ontario's 9,700 agents had renewed with only 1 day left on the clock. So that's a staggering amount. So about 2,000 mortgage agents have walked away. I think this could be due greatly to the lower interest rates that people are offering, therefore not enough money going into other people's, into their coffers, I guess. Once again, last week we learned more Canadians continue to heap on debt in the first quarter despite official warnings. Good thing is, it's not the worst debt. It's not as much in the credit card debt, but the biggest outstanding balances was for auto finance, loan, and leases. But of course, that comes with the territory of having the 0% financing. Once again, Flaherty says it's up to banks to fix the mortgage market. Nothing too surprising with that. Just another thing that I just read on the weekend that's very interesting is the thought of doing assumption mortgages. So right now, 10-year mortgages are 3.89%. This was a very interesting kind of strategy, whereas you would get the 3.89% for the 10 years. Say you don't want to live in your house for the next 10 years, it could be a selling tactic in the next 5 years if mortgage rates go up to 5-6% again, that you can offer in with a mortgage. You can say you could sell the house for a little bit more expensive and say, well, it is more expensive, but you can assume a 3.89% mortgage rate. So that's an excellent selling tactic that I'll be working on more in the future. But anyways, thanks for just listening for the past few minutes. This will be getting better every single week. I will be working out the kinks, but I just wanted to see how this first one would go. So thank you very much for listening. Please visit my website, mortgageinottawa.com. You could also go to Pachuski.com. Both are going to be a little different. The Mortgage in Ottawa is more of my blog, which I will be updating a lot more frequently. Tell your friends, family, anybody that you know that will be looking to buy a house.